Oops. Good morning, it's Jonathan Barrett with this week's Market Buzz. And looks like a lot of things happening out there in market land, which is good. Remember last week, PCI in the States rose by 0.2% in September. That's annualized rate eased to about 2.8. So that's not too bad in terms of keeping inflation under control. Also, we had the University of Michigan Consumer Sentiment Index that rose to 53.3, and that in itself is a little bit more positive. And I guess when you also look at the inflation expectations were lower than the forecast at 4.1, it sort of gets an idea that we're moving towards that dovish, or in fact an 80 or nearly 100% chance that we'll have a rate cut this week in the US. I think another bit of interest, ADP's surprise 32,000 drop in private payrolls and challenges 71,321 announced layoffs will certainly pave the way there for a rate cut. So as we suggested, more than about 100% that we will get that 25 basis point rate cut when the Fed next meet, which is this week. Also, we've got President Trump's coming out with the new announcement of the favourable Fed chair. Jerome Powell steps aside and good old Donald Trump will come up with someone, obviously, which will be, I guess, really on a dovish stage. Donald Trump always wants interest rates to go lower. And if the economy can handle that, he thinks that's a lever. So he'll get a governor in there that's going to be interest rate reduction friendly. Let's see what happens there. Also, this week, we've got a big week in China for data, particularly on the inflation and PPI. This week's Market Buzz, we do take a little bit of a deeper dive into that number and look at see exactly what we feel will occur there. And also RBA. This week, RBA, we've got, it's important. We basically look at interest rate movements there. And if anything there, there'll be I think pretty much no change at all. But the important thing here is that although there's no change, we're going to see sort of more of a hawkish comment coming from the RBA. So let's see how that unfolds. Okay, so as we suggested, we're sort of going to look at China. Now, one of the interesting things about Chinese economy, we always look for those green shoots of recovery. They come up and they actually then fail. So from my mind, it's sort of when is it that China really is going to emerge out of this deflationary period? Now, this week we do have very important numbers. And I think Wednesday's release of inflation and producer price index hopefully will build on last October's numbers. And if that's the case, then it's going to be quite supportive of the economy coming out of this deflationary period. And to me, that is really important. Now, I guess the consumer price index for October was up 0.02. And I think that reversed the number from September. And hopefully this makes a very positive, or last October was the positive CPI reading since June. And I think if we get that again today or on Wednesday, then it's going to be quite positive across the board. And certainly looking for that. We sort of look, when you look at the charts in the report, you can see that the economy hasn't been doing too much, but last October's number was positive, so we're really hoping that the Wednesday's read will be positive as well. And maybe that solidifies a bit of a trend. I guess the important thing here, if it rises to 1.2% year on year, it's the highest level in 20 months. And in my mind, that's certainly not a bad thing, particularly when there on that one, we focused on the food side. So sort of all quite positive on that side. Now on the PPI, I think that to me is producer prices. Now remember, the Chinese economy has just been in this deflationary period. We haven't seen any bouts of inflation. And to me, that is to see that start to move on signals some positive things. And I do get a sense that that's what we're going to see. Although the number is quite weak and will remain weak, the fact that it's a positive number in terms of not as bad as before gives us hope that we have that low. And I think the PPI, although we're still in that deflationary period, just seeing it start to move not as weak as before, in my mind, is a key that China is starting to rebound. So both CPI and PPI out this Wednesday. I think that's going to be very important and it'll certainly help solidify that we know that Chinese economy is starting to move onwards and upwards, particularly over 2026. Okay, so when we look both those, still got to be, let's hope for that improvement. Okay, this week in the US, we've got the Fed coming up, monetary policy decision, and we are looking for that interest rate movements. We are looking for a cut of 25%, 25 basis points. That we've also got some other jobs data coming out, and quite a few of the central banks are also starting to report. But as I said, I think that Chinese number will take centre stage this week because we already know what's happening in the US in terms of interest rates on that front. Okay, let's have a look at a few trades. Now, in this week's report, we did talk about the Aussie. Again, we are long the Aussie at the moment, and I really do enjoy the fact that the trend line that we've got. And I think that the trend for the Aussie is higher. And as you can see here, we've had this breach, this long period of consolidation here. We're finally starting to break out. And this is a weekly chart. So momentum indicators look quite positive to the higher end. I do think if we get a breakthrough 67.10 onwards and upwards. Now, the important thing about the break in this trend, and we've seen the charts before, that was a trend which commenced in August 2011 when the Aussie was 110 to the US. So this is a significant break here, and hopefully it'll continue. All emphasis on the Aussie going higher. From a technical side, the fundamental sides also look to support it. So we really do enjoy that trade. And I think if anything there, this is the start of a good trend higher. And also if you look at it from the fundamental side, hopefully China comes out of her May deflationary period. You know, the interest rate differentials starting to move more hawkish. That puts a positive spin on the Aussie-US interest rate differential. And of course, we've got some commodities, particularly the base metals, all looking quite good. So I think that holds good for this trade. We are currently long and looking to add when we get a break, hopefully through that US 70 cents. Okay, now let's have a look at go back and have a look at Brent or crude. There's the weekly chart. It's quite interesting that when you do look at what that's actually happening, we've got this breach, this consolidation period here once again, similar to the Aussie in a funny way. But if anything here, good support down here, as we know, 60, and I'm looking for that 1-2 trade higher against the trend. Now, when you really look at what's happening with OPEC Plus, everyone sort of, and when you look at the US, perhaps the economy slowing down, there's some people saying that there's a bit of a glut coming. Against that, I actually feel quite supportive the price of crude oil. When I look at this daily chart here, I think we've nearly broken that trend line, and I've got good divergence here in the momentum indicator. I think crude is going to have a good run to the top side. So currently long as well on crude. So hope everyone has a great week's trading, and we'll talk to you next week. Bye for now.